What's going on, guys? Welcome to today's video about dividend investing for beginners. Dividend investing can be a great option for anybody, whether you're just starting out in investing or you're one of the richest investors in the world, like Warren Buffett. In this video, we're going to be covering everything that you need to know in order to get started, starting with what exactly are dividends? All right. Dividends are payments made by a company to its shareholders, typically in the form of cash or additional stock. Okay. There's a lot of different types of dividends. Usually, we're talking about regular cash dividends, special dividends, or stock dividends, but there are others. One example of a company that's known for their dividend is Procter and Gamble. They're a pretty huge company, and they've been paying a growing regular cash dividend for over 66 straight years, making it a pretty reliable source of income for its shareholders. This means that through all the stock market's craziness, shareholders got paid out more every year, year over year, for the past 66 years. Sounds pretty good. These dividends were paid out quarterly, but some companies pay annually and some even pay you monthly. So, why would you consider investing in dividend paying stocks? First, dividend investing can provide a steady stream of income. If you're going to invest in a company like Pepsi, which has a long history of increasing their dividend, you can expect to receive regular payments every quarter, even when the market's down. Second, dividend investing actually has a potential to provide higher returns than just investing in the stock market alone. For example, over the past 10 years, the S&P 500 dividend index has outperformed the S&P 500 index by over 3%. That's a pretty big difference when you're talking long-term growth on your money. And then finally, investing in dividend stocks can also provide a hedge against market volatility, since you'll still often receive payments even when the stock prices are down. So, like in 2008, during the market crash, dividend paying stocks actually held up better than the overall stock market. So, while dividend investing has its benefits, it's important to understand the risks as well. For one thing, it's important to note that dividends are not guaranteed. Companies can choose to cut their dividend payments if they're having a tough time financially. For example, at the start of the pandemic, nobody had any idea what was going on. So some companies like Boeing and Ford, big companies, actually suspended their dividends so that they could hold on to more cash. It's also important to research a company's financials before investing, as a dividend can get cut pretty much without any heads up. If a company has a lot of debt, for example, it's a little more likely to cut its dividend payments as a way of paying down some of that debt. Finally, it's important to diversify your portfolio to minimize risk. Instead of just having one random energy stock with a high dividend yield, you should probably consider spreading your investments across multiple sectors like technology, healthcare, and finance. So, how do you get started with dividend investing? First of all, it's important to do your own research. I'm not a financial advisor. I'm not a wealth manager. I'm just a guy on YouTube talking about stuff that interests me. All right. To be honest, that's the same for pretty much every financial YouTuber. But, take a look at some companies' financial statements, check out their dividend history, and read some analytical reports. A company like BlackRock, which has consistently increased its dividend payments since 2003, makes a pretty good company, in my opinion. I think it's a great investment as a dividend investor. Others might completely disagree because it's actually fairly highly valued at the moment, and that scares people. Next, as I just mentioned, it's important to build a diversified portfolio so you're not just relying on one stock for your dividends. Try looking into a broad-based index fund that tracks the S&P 500 or another market index, which gives you exposure to a lot of different stocks that pay dividends. One of these, which I personally like, is SCHD. or Schwab US Dividend Equity ETF. Finally, make sure to set up a dividend reinvestment plan, also known as a DRIP. All right. This allows you to automatically reinvest your dividends back into the stock rather than just taking a payout as cash. This can help you build your wealth over time a lot quicker and get you to your financial goals sooner. Now, I know this all sounds pretty good, and I think it is, but it's important to be aware of some of the common mistakes that beginner dividend investors make. Don't just chase after high yield stocks without thoroughly researching the company's financials. Just because a stock has a high yield doesn't necessarily mean it's a good investment. For example, a high yield can actually be a red flag if the company has a history of cutting its dividend payments. Second, I meant what I said about diversifying. While it may be tempting to invest in just one or two stocks, it's important to have a mix of investments to minimize that risk. Finally, don't ignore taxes on dividends. Dividends are taxed as income, so it's important to consider the tax implications before investing. For example, if you hold a dividend paying stock in a tax deferred account, such as an IRA, you may be able to avoid paying taxes on your dividends until you withdraw the funds in your retirement. So there you have it. That's my beginner's guide to dividend investing. Whether you're just starting out in investing or looking to add some new stream of income to your portfolio, I think it's a great option. All right. Just remember again, do your own research, diversify your portfolio, and remember that taxes are usually a thing. All right. So if you want to get started in dividend investing, I have a link in the description so you can sign up for SoFi Investing. That's what I use. We use it on the channel. You can see it all the time. For new accounts started through the link, they are currently giving out free stock for your first investment of only $10. But thank you for watching. And don't forget to like and subscribe for more investing videos. Roll the outro.